The short-term price action is beginning to look quite weak as Bitcoin pushes back towards 29,000. What are the technical and structural levels suggesting, and what will be the next move? Let's go ahead and find out. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having an excellent day today. In today's video, we're going to be reviewing the short-term price action from a technical and a structural perspective, going over a variety of different technical indicators and informing you guys on the key levels and zones you should be watching going forward. Before we get into it, smash the like button, hit the comment button, and subscribe to the channel. We aim to post the most informative and factual-based analysis on the whole of YouTube, focusing on the facts, the data, the technical, and the news events. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the second link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. If you're interested in joining our VIP channel, we do have a VIP channel where we post our trading signals with exact entries, exact targets, exact stop losses. Everything is laid out and justified for you to follow at your own discretion. Of course, including access to the VIP channel, you'll get access to a variety of group chats. You'll get access to our trading chart and education chat. I show you trades I'm taking. For example, over here, we teach you how to trade, we develop your trading skills and market psychology. Our trading setup chat where people discuss their own trades and again, share their ideas. News chat, general chat, help chat, and of course videos. If you're interested in joining a community of over 600 members, contact me via the free channel in the pinned comment to go ahead and get access. So let's dive into a video because we do have a lot happening on a smaller time frame and a lot to plan and prepare for. But before we do that, starting on the market data. As of the 24-hour volume, we are sitting at 43 billion, down 25.3%. Looking at liquidations, we are sitting at 28 million. Again, volume is massively down. The market is very, very quiet right now. This is kind of normal. We do expect that to occur. Again, after news events, we generally see a little bit of volatility, but since we did see a non-event for CPI, meaning the result was pretty much unchanged, we didn't really see a lot of reaction to the market, and the market has died down and quietened down just a tad. Looking at August, we are up 1.12% for the month. Moving on to the volatility index, again, these are at record lows. The 30-day period is at 1.27, the lowest we have seen since July 2022, and the 60-day period is sitting sub 1.6, the lowest we have seen since all the way back in November/December 2016. Looking at those liquidations in more detail, we can see a variety of liquidations occurring on those long side, a little bit more aggressive toward the long side, with shorts lagging behind around 30%. Moving on, the DXY has seen another retest of that downtrending resistance. Since the CPI data was pretty much a non-result, we saw CPI come in at around 0.2%, which was exactly the same as our last month reporting period. Therefore, we did have a non-result. Pushing forward to the next news events, we have PPI coming out today, and of course, we have retail sales, and finally, FOMC on the 17th. These are very, very important events that could potentially shape the overall premise and perceived risk in the market moving into the next Federal Reserve interest rate hike, and it could shift the probabilities of those hikes. Looking at the DXY, everything from a structural perspective remains. If we break above this downtrending resistance, we expect a continuation upwards, and that would be bearish for asset prices. If we see a break toward the downside, that will be bullish for our asset prices, so watch out for all those things to occur. Moving on to the S&P 500, currently testing a pretty major support. It does look like we are losing strength over here. Of course, if we flip the chart, we can see we are in a overall falling channel, a descending channel formation, a falling channel. Whatever you want to name it, whatever you want to call it, this is what we are seeing at the moment. If we take a measured move of this channel, we take the overall width of the channel and apply it to a perceived breakout point, we can see the channel would target around about this 37,800 level if 3780 level if we do correct toward the downside. Again, until then, we are in a overall uptrend, and therefore any sort of move upwards should be not, I guess, looked at with confusion It should be to some degree expected, but at the same time, if we range toward these low sides when we break down, you should then expect a higher time frame continuation downwards. Moving on to Bitcoin, guys, I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. And like I said, the volatility and volume in the market is very, very low right now. And I told everyone on Twitter, and I'm telling you guys on Telegram actually pretty recently, earlier this morning, that you have to really understand how these markets work. And more so, you have to understand yourself and your goals. As you know, I've been a trader for a very long time, coming on 8 years now. And, you know, when I started trading, I didn't have Twitter. I didn't have YouTube, I didn't have Telegram. All I had was myself and the charts. And that is why I focus on such objective and pure analysis, because that is all I knew and that is all I do currently know. A lot of people have goals in this space to make money, to develop their platforms, or whatever it may be. Your goals in this space need to be unwavering, and you cannot change your dedication towards these goals based on how exciting or how volatile the market is. You should be unwavering in your dedication, focusing entirely on developing your skills as a trader, understanding price action, and tracking and monitoring how price develops, regardless of what the markets are doing or how exciting it is. You need to develop your skills if you want to succeed in this space. When I was learning, I was spending 6 to 10 hours a day on the charts. And excluding those 6 to 10 hours a day, I was thinking about trading 24/7, every waking moment. And I know this sounds very corny, but you need to get into that mindset. You are competing against people with infinitely more money than you, infinitely more experience, access to information, and influence and power than you. You have to either step up in the knowledge department, build up a career in politics so you can actually manipulate or influence the markets to some degree, or just get lucky. And obviously those two scenarios aren't an option. So the only option you have is to develop your skills, put the time and effort in to learn and actually trade based on data, strategies, and the charts. So go ahead, guys, focus. When the markets are boring, these are the best times to be paying attention. That is what we're doing today. We're taking a look at what is happening, even though the market is dropping in volatility. The market is dropping in volume. We are still here. We are still looking. We are still planning and preparing and profiting. If you are a trader, and a lot of you on this channel are traders, aspiring traders, current professional traders, or just traders at any sort of stage in your career, or even investors, the time to be looking at the market and preparing is when nothing is happening. It gives you an opportunity to sit back and review your possible scenarios and plan strategies moving forward. This is a time when you should be focusing the most. When there's volatility, it is execution, execution, execution. When it is boring, it is plan and prepare. So let's talk about that. Plan and prepare on the macro scale and then get into the smaller time frame. So on the daily chart, we have a very clear uptrend. Okay, our uptrend is represented by this uptrending diagonal trend line as per this black line. This represents the overall upward trajectory of price action over a period of time, that period of time being since early January to present. We're looking at around, 8 months or so. This uptrend not only represents the overall trajectory of the price action, but it represents a trigger point of which will flip the trend from a uptrend to a downtrend on a higher time frame. So if we fail to remain above this trend line, we could very well see the high time frame price action reject and develop a new downtrend. If we see that breakdown, the target level is expected to be 25.2 to 24.4, which represents that local area of support, which has spanned over 400 days. This is going to be the next major area of liquidity. If we want to further back that up with data, if we take a look at the VIPV, we drop off into VIPV and immediately pick back up at that 25k level, indicating we have a huge amount of historical orders that would flood in at 25k, providing temporary support or long-lasting support, as it did over here, as it did as a resistance here, and once more over here. How can we actually predict whether or not we will break down from this trend line prior to it happening? We have to take a look at our leading indicators, and a lot of people think RSI, momentum, is a lagging indicator. Well, here's the thing. The RSI is a lagging indicator, but momentum is not lagging. Momentum is a metric which can be used to understand how the strength is developing and then where it is more likely to continue toward. So when we look at the RSI, if we're using RSI to say, okay, we're oversold, time to sell, we're undersold, time to buy, you're most likely doing it very wrong. If you're looking for divergences, you can use divergences, but you need to use them in conjunction with liquidity levels. But what I like to use is shifts in momentum, particularly developing momentum, shifts from positive momentum to weakening positive momentum, shifts from strong bearish momentum to weakening bearish momentum. We can use momentum to pinpoint points of reversals or even points of continuations. So if we see a shift from what we have is weakening momentum. We have an overall downtrend, which is negative momentum, okay? And we see a shift downwards on the smaller time frame, okay, which is going to be increasing bearish momentum. That could result in a continuation down. If we break below this trend line over here, that would be an early indication that the price is weakening and is more likely to lose its uptrending level of support. On the flip side, if we want to see the price continue upwards, we need to see a positive flip. We can draw that same trend line across right over here. If the price breaks up through this level, we will have a positive shift in momentum, and the price is likely or more likely to break past that $32,000 major level of resistance. That is the high time frame charts right now. That is what we're seeing. Let's go ahead and move down to the smaller time frames. Looking at these smaller time frames, we do have quite a fair bit going on. To give you an overall summary, we had a horizontal consolidation in this upper range, which lasted around 30 or so days. We then developed a new level of resistance at 30,200 to 30,400, which is now represented by this green box. We consolidated at that green level, retested it numerous times before finally losing that low point of the horizontal consolidation at 29.8 and capitulating toward the downside. Ever since then, we have been slowly but surely grinding slightly downwards with some larger wicks back into this horizontal resistance at 29.8 to 30k. So if we're taking a look at the overall narrative of the trend right now in the smaller time frame, we can clearly identify the overall strength. Right now, we are daily bearish, right? Anything under 29.8 to 30,000 is daily bearish. Anything above 30,400 is daily bullish. Perfect. Anything above 32k is monthly bullish. Anything above 31.2, well, anything really above 28.4, sorry, is going to be weekly bullish. Anything below 28.4 is weekly bearish. So to go over one more time, below 28.4 is weekly bearish. That is when the weekly trend flips bearish. Why does it flip bearish? Because we lose this uptrending support line on that diagonal weekly chart. Anything below 29.8, we are daily bearish. We are in a downtrend upon the breakdown of this structure, moving towards that next level of liquidity. Anything above 30,400, we are daily bullish, breaking above this level of resistance, moving back into a uptrend into our next level of resistance, which then if we break above 32,000, we are now monthly bullish as we break through that major area of resistance on the high time frame charts. On the whole time we are doing all of this, we are weekly bullish as we are above 28.4k. As remember, to turn weekly bearish, we need to lose 28.4k, and therefore above it, we are bullish. However, we are losing strength on the weekly chart. We are weakening in our bullish strength as we are in our daily bearish trend. So remember, since this is a daily bearish trend here, if we are weekly bullish, but we are daily bearish, it signifies the weekly bullish strength is being lost. If we flip to daily bullish, we are still weekly bullish. The weekly strength on the bullish chart, the weekly bullish strength is increasing. So that is our zones. Those are key biases we're looking at and the key levels you should be watching. Let's break it down to a technical perspective and then go down to the smaller time frame. So we'll start on the 12-hour. I just want to go ahead and zoom up on some of these indicators, but we're going to start on the 12-hour chart. Give me one moment, guys. 12-hour chart, we'll go ahead and take a look. So here is a 12-hour chart, and we saw a nice breakout of this descending channel formation we had over the last couple of days. And a lot of you on the channel have been watching. We had this descending channel formation, which we broke towards the top side. Fantastic. We're actually coming down to retest that now. We'll discuss that in a second. But what we didn't see was the volume. We saw the CVD remain under this local area of confluence. And now it's not really a resistance, right? Because volume can't really reach resistance. It more reaches levels that we call trigger levels, where if the volume pushes higher than what we've seen in the past at these particular trigger levels, we see a bullish trigger. We see a shift in volume or a surge in volume greater than what we have seen on prior levels. And now this information alone is irrelevant. We need to apply context, and the context is all these points, all these local highs that were made on the volume delta occurred within this descending channel. So we broke out of the descending channel. We had a bullish flip in momentum, right? If we look at the momentum chart, we had the RSI flip positive. We broke out of our trend line. We saw the price move upwards. We did not see volume push through. So this is one indication, a very early indication, that this breakout upwards was likely a fake out. It was likely a fake out. And that is why we went short, right? We shorted at this level, in this level, expecting a correction toward the downside, and so far it has corrected down. So how low could this correction go, and what does Bitcoin need to do to ignore this correction? So first and foremost, from a perspective of a higher time frame, for the price to come back upwards, we need to break over 30,400. Very obvious stuff, but let's talk about exactly how that can occur when we get into, the nitty and gritty on this small time frame price action. Really discuss, what is shaping up, how it's shaping up, and what to expect. So we'll go ahead and drop these indicators back down to the bottom side. We'll bring them up in just a moment. We need to identify what is happening on this chart. So we have a parallel range. We'll go ahead and draw our parallel range in, which is going to be our parallel channel. We take these from the high points and we can apply these to our low points right over here. This is our parallel channel that we have been developing and we have kind of played within now for quite some time. We had some fake outs toward the top side over here, but more or less we've come back down and kind of developed price action in this range, liquidations toward the downside, breakouts toward the upside. All these breakouts have occurred toward the upside, have actually retested that major area of liquidity, which have then resulted in corrections back toward the downside. So deviations, this is currently still a breakout, as it hasn't been confirmed as deviation, as we have not broken back downwards. Now, if the price action were to lose this current base level of support, we could expect a continuation back into this mid-level between the POC and the dotted trend line. We're looking at around 29,200 to 29,000. That will be the next move for Bitcoin from a bearish perspective if we continue downwards. Let's take a look at what some of our technical indicators are suggesting in regards to that move. So right now we do have the RSI, and you can see on the RSI chart again, we're going to go ahead and identify some of these trigger points. So drawing our momentum lines across right over here, we can see we do have overall bearish momentum. So we do have bearish momentum. The open interest is falling, of course, which represents a shift from buyers and sellers. And of course, the CVD is dropping. It is in a downtrend, has been falling ever since we created this local high point over here, representing again the strength between buyers and sellers are moving towards the seller side. The buyers are losing overall strength. If we want to see the price break upwards, we are going to need to push a little bit higher, but we'll discuss that in just one moment. But we do need to break positive momentum. We need that RSI to push upwards before we have any chance of actually bouncing from over here. Until then, expect a short-term correction lower. Let's go ahead and jump into a smaller time frame. But actually, one thing, guys, before we do, if we see a breakdown from this level, we push into 29.2, we are very likely to continue to retest the lower end. And if we retest the lower end, what happens on one side generally actually happens on the other side when it comes to these channels. We could even expect that lower liquidity grab into that 28.4K level before we bounce and continue upwards, or of course, reject and lose that uptrending massive daily trend line and continue lower. So definitely watch out for those two perspectives. Let's go ahead and jump into an even smaller time frame, 30-minute, and talk about exactly what we need to see a continuation upwards. Now, the price action is very choppy and very hard to read over here. There's absolutely no doubt that is the case. And the reason being is because two things. Number one, we had liquidity grabs into this range. So we generally see overextensions of the price action. And then we had, of course, the CPI data, which caused a little bit of short-term volatility. So it kind of makes the structural analysis a little bit more convoluted and tricky, but we can go ahead and still identify that key downtrending level. And again, we take those local high points of a diagonal level and we drag that across. So we can identify this as a potential trigger. If we're looking at a horizontal scale, we can go ahead and draw in some horizontal resistances. Of course, we have a horizontal resistance sitting at this level right over here. This is going to be that level of liquidity. You can see we had numerous retests of that level towards the downside right over here. We had a retest towards the upside, and then we had a liquidity grab below before pushing back down. If we look at the VRPV, we can see a gap here in the VRPV before we start building back up into resistance, and therefore, if we do break above this trend line, we're likely to see a pushback into this resistance before we reject and continue downwards, or break up and retest this zone one final time. So again, short-term price action, I'm not really expecting anything more to develop. If you have been following the channel for the last couple of days, you would know we did expect a breakdown. We actually went short around about this level over here. Been expecting a breakdown from that level, and we have seen now that continuation and that laddering effect down toward the downside. So far, so good. We're happy to remain in those positions. I'm going to leave the video there, guys. Thank you for watching. I hope you have an excellent day. I'll catch you guys in the next analysis on Sunday. Have a great weekend. See you then. Bye.